In today's video, I'm going to speak about 7 different ways on how you can actually change your trading for the better in 2024. These tips are coming from someone who has been trading in the Forex markets for over 4 years now. So I feel like I know a thing or two about trading, especially as a complete beginner 4 years ago when I didn't have a clue what a pip was, and coming on to where we are at now, trading with multiple 6-figure accounts, 6 figures plus in prop firm payouts, and a beautiful track record on my personal account. Without further ado, let's get into the tips. So tip number 1 is be humble after a winning streak, or after you've received some wins in your trading. It gets to the point where if you have been losing for a while, you will eventually start to see wins. If you're developing a strategy, if you're developing your risk management, your psychology, you're going to eventually see some wins. And once this actually happens, you need to stay humble. You don't want to be the type of person that has 4 wins in a row or 5 wins in a row, and all of a sudden you're like, I'm the best trader in the world, I can do anything, I can up my risk now, I can start risking more, I can enter trades, I can see the markets, I know exactly where it's going to go. This is the worst type of trader you can actually be. This happens a lot to traders when they're actually trading with prop firms. So they'll pass phase 1, they'll pass phase 2, and then they get onto the funded stage and they're on top of the world. They've passed phase 1. They look at the statistics. How many traders actually usually pass phase 1? Only 8% or 9%, let's say. Okay, now they're thinking, oh, I'm in the top 8%. How many people pass phase 2? An even smaller percentage. They're again thinking, okay, so I'm better than this amount of people. Their ego is very, very high at this point. You know, once they finish their trading, their head will be so big they probably won't be able to get out of their office. So once this has actually happened, you need to stay humble. You realized, okay, I'm doing better than the majority of traders. I'm making more profit than the majority of traders. Don't push it. Don't push it to the extreme where you eventually end up losing everything just because you are overconfident in the markets. The markets will always humble you. If you're overconfident, you increase your risk, you trade differently to your plan that you've actually got to that place in the first place from actually doing, you're going to lose. And you're going to lose in the long term if this is a recurring theme in your trading. This is also the same outside of trading. You need to be humble. If you make more money, act the same. You don't want to be that type of person that just brags about all the money they make. It's not the type of person you are going to want to be. Moving on to tip number 2, and this is only trade one pair. You guys are probably sick of hearing it now, but I genuinely think this is the best way to master trading with any strategy. I say a lot about trade one strategy, one session, one time frame, but I feel like the one tip out of all of these that can definitely change your trading is by only trading with one pair. The main reason why I think this is it kind of relates to a Bruce Lee quote. I fear not the man who has mastered 10,000 kicks, but the man who has mastered one kick 10,000 times. I might have butchered that a little bit, but you know, you get the idea. If you practice one thing 10,000 times, you're going to be a master at that one thing, rather than mastering 10,000 different pairs. I know that is a bit of a hyperbole, but maybe 10, 15 pairs that you try and master, you're not going to be as good. So I always put full focus, full determination towards mastering that one thing, and that for me was GBP USD. Previously, a couple of years ago, it was gold or XAU USD. I mastered that, but I wanted to change my trading. So what I did was I tested out different pairs, which one was most profitable. I found that it was GBP USD, so I put all my eggs in the basket of GBP USD and went flat out in learning and mastering that pair. And I feel like now I have a very, very good understanding of the pair, especially when to trade, when not to trade, when to actually risk my hard-earned money in the markets if I think it's going to drop, if I think it's going to sell. These are things which you actually need to know. We're going to move on to the next tip now, which is to grow your capital, not your profit. And this is going to sound quite stupid because a lot of people try and make more profit, they try and grow their accounts, but the main reason why I say to grow your capital and not your profit is you'll see people trading with a 100k funded account. And let's say they're seeing other people with 400k, 800k, £1 million in their account, and they're making 50, 100k trades, for example. And they want to make this amount of profit, but instead of growing their capital to get to the point where $1 million or 100k isn't a large percentage, instead what they try and do is risk more and enter more trades to try and make the same amount of profit on their smaller account size. And this can be very, very deadly. If you're risking the same amount on your account as you would on an account 10 times the size, your losses are going to be 10 times bigger, and the drawdown and the account being blown is just 10 times more imminent than if you were trading with your usual risk. So the best way to actually get around this is to focus on growing your capital. If you can pass a prop firm challenge for 100k and get onto the funded stage and receive payouts, then you can do that with a 200k account, you can do that with a 400k account. The premise of trading, passing 2 phases, getting to the funded stage, it's exactly the same, no matter how much the actual account balance is. So if you're trading with 200k, you can take the exact same trades on a 1 million account, and it's going to be the exact same result percentage wise if you are using risk according to the account size, obviously. If you want to grow the profits from, let's say, 10k days to 50k days, 60k days, then the best way to do this is to grow your capital. That's what I'm currently doing on a series on my channel that is coming soon, going from 0 to 1 million in prop firm capital, or 0 to $100,000 in prop firm payouts. So be sure to keep your eyes peeled on the channel for that coming soon. The whole reason I did that series was for this point. You can start from 0, you can start from basically a beginner trader, not having much experience or not having much capital, and get to the point where you are trading with 7 figures in capital, obviously we know it's not actually 7 figures, and then get over $100,000 in payouts to make sure that, okay, it's not just good getting that capital, but actually getting paid consistently from that is the thing that really matters in trading, which you guys will understand. And moving on to tip number 4, and this is very, very important, journal absolutely everything in your trading. Let's say you're just looking at a setup, you're not going to take it, but it's a nice setup. Screenshot it. Write down, why did you think this was going to be a good setup? Why did you mark this up? Why do you think it was going to win? Because you obviously saw something and you thought, okay, this looks like it's going to sell. So why did you think it's going to sell? How did the trade play out? Did it eventually sell? These are things which you actually need to be journaling. A lot of people, they'll only journal once they have either a good week, a good month. People don't like journaling, losing weeks, losing months, or even losing trades, because it forces you to hold yourself accountable, which the majority of traders don't actually want to do. And that is a sad reality of trading. And that's probably why the percentage of people who actually make it in trading full time is extremely low. You know, if you look back on my camera roll from 3 years ago, 4 years ago, like 2020, 2021, the amount of screenshots I have of charts, of trades that maybe I haven't even taken the trades, or I'm taking trades and I screenshot the before, the after, journals, everything on every single trade I've ever taken. Because it's good to look back. Let's say I'm struggling and I've had a few losing trades in a row. I'm on a nice little losing streak. I can go look back at my winning streaks, the weeks where I've had most profit, or the months where I've had the most profit. Was I doing anything differently? Was I entering at the same times, trading the same pairs, the same setups? Was there anything different that I might have changed without even knowing it? You know, you can subconsciously change something without even knowing you changed it, and it could result in a discrepancy from your normal results or from your backtesting to your live trading. And then once you realize this, you can look back, okay, a year ago when I had this really good week, I was trading at this time, and now I've suddenly started trading later in the session, and it's meant I've started to lose trades. This is something which you can find out really, really quickly just from journaling. Whether it be on Excel spreadsheets or Edgewonk or any trading journal which is out there, they all have the same sort of similar features. Obviously Excel, you have to write in all the formulas yourself, but it's relatively easy to put in screenshots, everything like that. But if you journal everything, you can find out exactly what you're doing wrong, or just ways to improve even if you're winning. Now moving on to step number 5. This is to stay in your own lane. When I was learning to trade, all I wanted to do was speak to other traders, follow other traders, and just copy what other people were doing. I wanted to know if this Instagram trader was in a trade, and if he was in a trade, I wanted to be in there too. And this was quite dangerous. It meant that I would take trades which I didn't really understand. I didn't know why this guy was selling. I didn't even know if he was a profitable trader, but I wanted to be in that trade. I wanted to learn exactly what they were doing. I feel like the best way to learn is to pick a strategy, whether it's buying a course, my mentorship, or learning a strategy just from backtesting or just finding out things online and just mastering that. Rather than following this person, then you see another person making profit or more profit, and then they must be doing something, they must have the holy grail, so you want to follow their trading, follow their strategy, and try and make profit using that. But if you stay in your own lane, focus on your own trading, don't share your results everywhere, don't care about other people's results, a lot of people compare their results to mine. I've been trading full time for 3 years. You can't expect to get the same results if you've only been in the markets actively trading for 6 months. It's just not going to happen. Obviously, there are cases where people could trade for 6 months or 3-4 months even and make a hell of a lot of money, probably more than me, but the average trader isn't going to make money in their first 6 months, in their first year. So you need to be able to know when you're trading to not compare yourself and to just focus on your own journey. Everyone's going to experience things differently, and if you focus on yourself and just improving on your own results, then you're going to be 10 steps ahead of the person that's focusing on just impressing someone online. The best way to actually track your progress is to just base it off of how you were trading yesterday or how were you trading last week. If you can improve something every single week, every single month, then over the year, over the next 5 years, 10 years, think how much better you're going to be. You're going to become a very complete trader, and it's going to mean you look at the charts, you know exactly whether there's going to be a setup or not. You know exactly how much risk to use. You know exactly when to close the trade, just from focusing on yourself and journaling everything. So tip number 6 is to reduce stress outside of trading. This one, a lot of people probably lose because of it. They could be really, really good traders, but because of all the pressure, the external stress outside of their trading life is causing them to fail. Whether this be they have bills to pay, they've gone full-time in trading, they don't have the right amount of capital saved up, they don't have the reserved funds, they are forcing themselves to make money from trading, which means they take trades which they wouldn't normally take. They risk more for the sake of having to make money. And these are all external reasons why trading could be extra stressful for you, and it's putting strain on your results and on your trading. If you go onto the charts in the morning and you know in the back of your head that you have to make money to pay your rent, or you have to make money to be able to buy food, you're going to enter a trade. It's as simple as that. You're not going to be able to wait 3 weeks for a setup because the setup might never come. You might never find that trade that pays your rent or pays for your food. Whereas if you have a job or other incomes outside of trading, then it becomes a lot easier. You don't have to force yourself to enter trades. You don't have to force yourself to sit on the charts every single day and trade, because there is no pressure for you to enter these trades. There's no pressure for you to enter. And once you have reduced this external stress, then your trading can become 10 times better in the long run. And step number 7, a lot of these points previously have kind of built up to this, and it is to not rush the process. So don't rush the process in your trading. People expect to be profitable trading 6-figure, 7-figure accounts within the first 6 months. The reality is this is not going to happen. It could happen. It's a rare case that it could actually happen, but it's most likely not going to happen. There's no reason for you to try and rush the process that normally takes someone 3 years to get it done in 6 months, especially with trading. The best way to improve in trading is through market experience and developing your strategy. You can't spend enough time backtesting unless you are testing 20 hours a day, every single day, in 3 months, the same as someone would be able to do in 3 years who's spending all their time trading. It's just not possible. So if you get to the point where you are 6 months in, 12 months in, and you're kind of like, okay, I'm not really seeing the results I want, what am I doing wrong? You should either think, if you were starting a business from scratch, how long would that take to be profitable? Just think of the percentage of businesses that actually fail. It's a very, very high percentage, especially those businesses that have been running for only 6 months or 12 months. And if you treat trading as a business, you're not going to expect to make tens, if not hundreds of thousands of pounds in the first 6-12 months as you would a normal business. It's just not going to happen. You need to think, okay, the next 5 years, that's what I need to focus on. How can I improve my trading consistently to the point where I'm a better trader every single month, every single year? It doesn't matter if you're at the point where you're making £100,000 a month within 12 months of starting trading. That's not relevant. As long as you're improving your trading every single month, improving on your results, improving on your profit, your win rate, everything like this, then that's all that really matters. Don't rush the process, stick to your strategy, master your plan, and that is the way to become profitable. So if you guys did enjoy, be sure to like and subscribe, and I'll catch you guys in the next one.